pretty strong breakup out of the midday consolidation. We came back and tested GN, bounced off of it, closed the day up around 60.15, or like 40 BPS higher than the market maker's upside expected move, which means calls were really cheap earlier. This probably isn't going to help realized vol too much, but implied vol will have come down today a bit, so we'll probably see those diverge a little over the 10-day. Obviously, we've regained 6100. There's a decent amount of space between us and gamma neutral, so this should be slightly supportive, and then we'll see how much GN and like the GN on the weekly and monthly continue to move up with spot. We tested 6138.50 on ES, which is a little bit higher than the high from last week before we failed, but we're still lower than the Friday high on the 31st and the Friday high on the 25th. So there's still a chance that we could see weakness into the back half of this week, but we did get over last week's high, which is relevant. Lower low, or higher low, higher high. So could be an indication of a turnaround after several weeks of continuous breakdowns since Trump took office. The dollar fell today. No one really knows why. Inflation was hotter on PPI. Should be up. So should yields. A lot of bargaining going on with the PPI revisions because the trailing 12-month PPI is coming down, but if you go to the trailing 3 or 6, it's moving up. So this is really just a sentiment effect more than anything. And there may be some buying into treasuries to hedge off currency risk as well. So we did see yields move down, not as low as they were prior to the PPI or CPI print, but we're past the inflation data. The event vol is starting to fall off after retail sales tomorrow. We really shouldn't have any significant event volatility until like after OPEX, and so that gives a little bit of time for vol shorts to come in, at least over like the next weekly expiration. Commodities moved up. A little bit more geopolitical uncertainty today. We've got oil up slightly, still above 70 a barrel, but barely holding on. Gold and silver moved up a little bit more substantially. Copper and industrial metals moved up. It looks like materials and agriculture as well. Under the pretense of retaliatory tariffs, I think some of those gains were given back. We did get a big move down in correlation into the end of the day. Most of that in the short-term correlation. So the vol shorting and dispersion trades that are coming in are fairly near term. I would suspect that a significant amount of that has to do with NVIDIA's upcoming earnings. If those are a failure, or they miss, or don't meet the ridiculous expectations set forth for them, and this is going to be in the last week of Feb, that could have some significant consequences. But we're still a couple weeks out from that, so we'll see how that goes. Leverage on the carry trade declined a little bit into the end of the day today. Overall down today 2.4% on the top end, with the short and long end also dropping. We got a pretty strong reaction to the yield curve falling negative. This happened last time too, like the forward yield on the treasury returns falling negative, and the forward yield on vol now at negative 12%, which is about as low as it usually gets. So they really shorted the out of vol today pretty hard. Well, last couple of days. That might rebound fairly violently, so I'd watch out for that. But yen up against the dollar about 1% today. Dollar declining, so the spread's narrowing a little bit. No really significant moves in bond volatility, although with today's drop in yields, maybe there will be. There was a tail on the 30-year auction today, and also on the 10-year yesterday. So I would look for yields to bounce back. I don't think they're going to stay down for long. A little drop in skew yesterday, but I would say probably up today. We'll look at that after 4:15. Not a lot of breadth in this move. Mostly this is run by tech. 43.14% of the S&P above its 20-day moving average. So, just a very, very tech-centric pump. And correlation between VIX and cash VIX continues to rise. 86.09% today. Over the last week or so. Well, from the most recent low, it's up about 11%. As that correlation gets higher, the chances of sporadic violent moves in VIX are going to kind of increase. But definitely not seeing as much vol shorting as we were before. And so without all of that vol short as a support, or at least over the 30-day window, the markets can slide really easily. It's not going to have all those massive piles of sold puts there like we had back in December, or like back in Feb of last year. Fed fund futures basically they're done. I mean, they're not pricing any more rate cuts in for the first half of this year. I think the soonest rate cut we have potentially priced in is September. That's definitely not getting better with inflation heating up. And so we've got one hot inflation report. I'll get into that in a second, actually. The bear steepener pulled back pretty hard today, down about 17%. And the 10-year is still way ahead of the S&P earnings yield. On the technical side, we haven't really, I mean, this is the weekly, we haven't really broken out of the diamond top. I still would want to see a breakout above the 61.28 level. And then remember, those breakouts can fail. It's only a technical indication, but this is a fairly well supported level. We got a strong bounce yesterday off the 50 MA. We'll have to see where this fizzles out, but the levels I would look to the upside for confirmation of continuation are going to be like the high from the 31st and the high from the 24th. So the prior 2 Fridays. If we fail again on a Friday, that's probably not a very good look, especially with the breakout above trend. And then, inflation. Yeah, so we have a hot inflation print, right? We have a hot PPI print. And, whether analysts want to be like, oh, well, PPI is coming down over the 12 months, so we'll price down inflation over the 1-year window or not. PPI over the 3 and 6 month is moving up, right? And if we hit month 7 with PPI moving up, and we continue to see these steady increases in inflation, not steady, actually rapid increases in inflation, the threat really can't be ignored. Like last time we were middling, kind of cool. Core came down, so you could kind of work your way through it. It was bearish, don't get me wrong, like the market sold off, but it was questionable. This time it's not, it's just hot. Now, if that repeats itself moving forward, you're going to start to get a confirmation of a trend in inflation heating up. I think the most notable next situation is that inflation is running rampant in Japan. Yeah, it's far above their estimates already, and it's going to continue higher. And yeah, they may need to increase rates again. They already do need to increase rates, but they may need to increase the pace at which they do it. But I mean, I think their target end of year is 1%, and they're still very far off from that. Thanks, JPOW. Yeah. Wow. I would say that it's more likely come September, if inflation continues on this path, that the Fed will need to raise rates rather than cut them. But Japan hikes again. Does it even matter? We just go to 1,000% leverage. Yeah, it will. Because it'll tighten the spread beyond where the dollar has moved. So unless the dollar can move up another 10% between now and then yeah, it would be pretty bad. Right now there's a little bit of padding, but only because the dollar's up. If the dollar starts to come down, that's going to be very bad for the carry. The dollar came down a little bit today, but not. I mean, it's still not like a significant move yet. I've been long yen since the last rate decision. It's not up a ton, but it's up a bit. What time's the roundtable? 9 p.m. 9 p.m. here and on the Discord. And I'll see you guys then. Everybody have a great night. Later.